Random variable setup. Session prerequisites. Browse to our earlier material on probability. This is archived under QM101.1X. You must be enrolled into the course to view archived content. In preparation, please have the spreadsheet open on your computer and follow along. Maximum benefit guaranteed.
You know, Lisa, my bank sent me an account summary recently and I'm not that thrilled with my returns.
Returns? Is that a savings account?
Yes, now I'm thinking of hitting the equity market. I'm going to try my luck with some stocks.
Hope you've done your homework.
Yeah, I figured out a couple of high performers in the software industry.
You told me you'd worked in software.
Got a good memory, Lisa. But you know, investing is yet another cup of tea. So what I did was to get data for these two stocks for the last 2 decades. I'll call these two firms Software X and Software Y. What we have are only monthly close prices because daily stock movements don't really interest me. I'm a long-term player. And if I get over to my analysis sheet, I'm looking at the movements of these two stocks. These are actual stock prices for Software Y in red and Software X in blue. And the line chart alone tells you why I should have bought these stocks a long time back.
You wouldn't be in the teaching line.
So I wanted to do some basic homework before going to a real stockbroker. And then I thought, why not walk you through my line of reasoning? Hello and welcome to Statistics for Business 1. I'm Shankar, your instructor for the course.
I'm Liza, and I rarely walk his line.
In this segment, we'll go over the framework of random variables in the context of stock price movements. We'll derive the probability mass function and cumulative distribution for a random variable. I'll begin with a disclaimer. I'm no financial guru, so don't take my line of reasoning for actionable wisdom. Leave that to the folks who work with stocks for a living. What I know is to raise some common sense questions of such a data set. How much money can I expect to make when I buy one share of a firm and hold on to it for a while? How will this answer change if I buy multiple shares of that company? We could start thinking about portfolios. What if I bought one share each of firm X and firm Y? And what if I bought 100 shares of firm X and 200 of firm Y? Next question, are the answers to my earlier questions subject to variation? And if so, by how much?
I'll call that a meta question.
Let's go a bit deeper now. Suppose I buy one share of a firm at the end of the last month. What is the chance that my investment would increase in value by the end of this month, given that it had gone up the previous month as well?
That's one long list of questions.
Yes, and we'll spend the next 3 segments trying to arrive at the answers to our questions. As a first step, we'll time difference our monthly closes so the price is out of the picture and we can focus on the stock's movements from month to month. We've even inserted 2 columns, movement X and movement Y, in our spreadsheet. I have movement X and movement Y, and if I double click on this cell over here, it's nothing but the current month's stock price minus the previous month's stock price. Now, having constructed the movements, I'll go ahead and create some summary stats. I've already made a list for both of the stocks, but just for our information, we know that this is the minimum of C:(C), which is nothing but the column that contains movement X. When I did my homework, I created summary statistics for both the stocks, Software X and Software Y. Remember, we have time differenced movements. So the ranges that you see are not for the stock prices, but for the stock movements. Next, we'll create bins to put these movements into. Each bin is 1 standard deviation in size, and that is 74.66 in this case. We round off the minimum and the maximum for the outer bin limits. The bin values that you see over here are the midpoints of these bin limits. Any data between two limits gets mapped to the same bin value. For example, if I have a stock movement of rupees 100, then it falls between this bin limit of 83 and this bin limit of 158 and gets mapped to this bin value of 120.23. You get my mapping. Think of the stock market as a process that generates outcomes, like monthly differences in our case. These outcomes comprise a sample space.
Oh my God, probability.
Yes, we map the outcomes in our case, monthly movements, into a much smaller set of bin values. You just saw that. Look up the mapping column to see what is going on.
That must be one long if statement.
Oh yes, it is, Lisa. Now this mapping seems like an approximation, but we'll show you in the next segment that there is not much to lose.